Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, we're taking a look at the Bund, the FGBL futures contract. Now for us in the US, we start trading it at around 8 o'clock, 7 o'clock or so, depending on when you wake up to start trading. But if you traded it in the European session, you had some really nice movement as well. Now, looking at the European Open, we had a fairly strong dive lower and lots of selling continuation pressure. We then went into a little bit of a range. Maybe you could call that a wedge, I suppose. It's not the greatest looking wedge in the world, but a wedge nonetheless. Mostly just a range, finding some resistance at the highs, and we started breaking down. Caught a big breakout move right towards the open at 8 o'clock. With bad follow-through, right? It makes you a little bit nervous because, well, if this is going to continue down, why can't they get underneath that prior low? But this is where things switch gears a little bit. We show weak bears into really strong bulls. And if this is going to be a range fade, the buyers should swarm this thing to the upside right above this candle. And they can't even trigger the buyers in. Now, I'm not going to sell that first attempt down because you're still a little bit weary, right? You're looking at it thinking, well, you know, yeah, the buyers failed, but at the same time, where are the sellers, right? If the sellers are in this, they should be able to hold this down more aggressively than this. And these buyers, if they did buy in it, they haven't been stopped out yet. Their stops are either below that candle or below the low, so they're still in it. They just know that they have bad follow through. And then we get a really weak bull candle into a very strong bear candle, and that seals the deal, right? We know the buyers are no longer going to hang out waiting for this market to continue higher, not after they've gone full risk and it can't go back up even to their entry point. Notice it missed their entry point by 1 tick. That's a big clue because now the buyers, they aren't even able to get out at break even. They're stuck in this move, and knowing that, we get a strong bear move back down. That is all systems go for a nice dive lower. Great little short trade to drive the market down through that low and get that breakout that we've been waiting for. Now, after that breakout occurs, very frequently you'll get a pullback to the breakout point. We hear that all the time, right? You get a breakout, pullback, and continuation. The same thing happens here. We get a strong breakout to the downside. They come back to retest it. We get a nice first bounce down. We get back underneath that breakout point. Sellers show back up again for a nice little scalp short. And when we came back to that area again, trap the highs into a very bearish candle to finish the move off back to retest the lows. So overall, just a phenomenal day when it came to the bonds, especially if you woke up early enough to trade the European markets. It seems to be the European markets over the past several days, if not several months, has been very good movement. The US session kind of lackluster. Looking at some of the other markets today was really slow across the board, but there were a few that were moving. The NASDAQ would be another one that moved pretty well. But all things considered, you can still make it a pretty good day as long as you stick to those plans and, like we always say, follow the rules and trade those rules. But hopefully this helped you out. Hopefully you found it useful, maybe a little bit entertaining, and we will see you next time.